Last Saturday I told you chips got crushed and money was fleeing tech. 5 days later, Micron's back above $1,000, Meta just had its best week since 2024, and Korea floated its crown jewel on the Nasdaq. The chips struck back. But before I read this week's tape, let's do what a research brief does, grade my own calls from last Saturday, in public. I made 3. Every one of them hit. And here's the twist that makes this week interesting. I was right on all 3, and the market still did the opposite of last week's headline. I'm Big Z. This is your weekly brief for the week of July 6th. Put the 3 calls on the board. Call 1, as long as the S&P holds 7,400, the rotation stays orderly, not a rupture. It closed at 7,575, the floor never even tested. Hit. Call 2, watch credit, under 3%, its rotation. High-yield spreads finished near 2.67, still cycle tight. Hit. Call 3, read Wednesday's Fed minutes for how serious the hike camp is. They showed a divided committee, only a few officials pushing to hike, and the dot plot tilts to just 1 more this year. Call it a hit on landed and real, a partial on how dominant. 3 green marks. The framework held while the surface flipped inside out, and that gap is this week's whole story. Here's the scoreboard, and it's upside down from last week. The Nasdaq led, up 1.7% to 26,281. The S&P added 1.2 to 7575, back within 0.5% of its record. And the Dow? It set a fresh all-time high on Monday, 53,056, then gave it all back and closed red, down 0.5%. The only major index to fall on the week. Last week the Dow made the record and chips got crushed. This week chips led and the Dow was the laggard. That's not a rally or a sell-off, that's money changing seats again, this time sprinting back into exactly what it dumped 7 days ago. VIX at 15. The fear's gone. The churn isn't. Where did the money go? Straight back into the 2 corners nobody wanted last week. Technology, the worst sector 7 days ago, finished among the best, up about 3%. Energy led too, up 3.1, on an oil bid I'll come back to. And at the bottom this week, healthcare and materials, giving back gains after healthcare hit an all-time high midweek. Read the tape, the defensives that got bid during the chip scare got sold once the scare passed. This is the same rotation engine as last week, just thrown into reverse. The leaders were never broken. They were just, for 1 week, out of favor. Favor came back fast. So what bought the chips back? Not a data point, a referendum. On Friday, SK Hynix, the world's number 2 memory maker, listed on the Nasdaq and raised $26.5 billion. The largest listing ever by a foreign company on a US exchange. The book was 7 times oversubscribed, and the stock popped 13% on day 1. Think about the timing. 1 week after Michael Burry called AI a bubble and crushed Micron, the market handed an AI memory company the biggest foreign IPO in history and begged for more. That's not sentiment. That's capital voting with $26 billion. Add Meta's best week since 2024, up 15% on its custom AI chip plan, and Micron reclaiming $1,000, and the message is blunt, the AI memory trade isn't dead, it just went on sale for a week. And if you want the full teardown of who actually owns the high-bandwidth memory supply chain, that deep dive is coming on this channel, subscribe so you don't miss it. The movers show you exactly where the bid went. Meta, up 15%, its best week in over 2 years, on a plan to mass-produce its own AI chip and a 7-gigawatt compute build-out. SK Hynix, up 13 on debut. WD-40, yes, the lubricant, up 15% after a clean earnings beat and a raised full-year forecast, proof the bid wasn't only in megacap AI. Micron, up around 4.5 on Friday alone, back over $1,000, with high-bandwidth memory sold out through 2027. And Nvidia, up 4. The one red flag in a green week, Microsoft slipped as it confirmed nearly 4,800 more job cuts. The bid went to AI hardware and real earnings. Almost nothing got sold. That's a risk-on week by definition. Now the internals, is this rally real, or just 5 big names? The healthy read, 63% of the S&P now trades above its 50-day average, up from barely half a month ago. Both the Nasdaq and the semiconductor index clawed back above their 50-day lines by Friday, after dipping under them Tuesday. The honest caveat: the semis are still 11% below their June peak, and the Dow and small caps lagging tells you leadership was mega-cap tilted this week, a few giants doing the heavy lifting. But breadth widening while the index climbs is the opposite of a narrow, fragile top. Underneath, more stocks are participating, not fewer. That's the tell that separates a durable push from a blow-off. 3 signals the mainstream recap skipped, and the first one matters more than any headline. 1. Bonds didn't get the risk-on memo. While stocks made new highs, the 10-year yield climbed to 4.57%, its highest since May, up in 8 of the last 9 sessions. The 2-year sits near a 52-week high. Equities are pricing relief, the bond market is pricing a Fed that still wants to hike. That divergence is the single most important chart into next week. 2. Oil went up while natural gas went down. Crude rose 3.5% on Middle East supply risk, but natural gas fell to a 6-week low near $2.95. That split tells you the energy bid is a geopolitical premium in crude, not a broad demand surge. 3. A running callback. For the third brief straight, uranium spot sat flat, near 85.75, yet Cameco is up 13% on the year. The equity keeps pricing the long-term contract cycle, the physical commodity keeps saying not yet. That gap is still open, and I'll keep flagging it until one side blinks. How do you value an AI bubble 1 week after someone called it a bubble? Ask the order book. The IPO window didn't just open this week, it made history. SK Hynix priced 178 million American shares at $149 each, raised $26.5 billion, and closed its first day near 168, up 13%. It's the biggest U.S. listing ever by a foreign company, and the order book was 7 times oversubscribed. And it wasn't alone, the biotech window stayed hot, with Cardigan popping 38% on debut. When investors line up 7-1 for a foreign memory chip maker 1 week after an AI bubble scare, the new issue market is telling you the appetite for AI exposure is very much intact. Substance got funded. The story got funded too. The data underneath the rally, and it's why the bond market is nervous. Wednesday's Fed minutes confirmed a genuinely split committee, rates held at 3.5 to 3.75, the vote unanimous, but a few officials wanted to hike now, and the projections tilt to one more hike this year before any cuts. Chair Kevin Warsh, days earlier, called inflation too high, and the market listened. Odds of at least one hike by September now run near 70%. Jobless claims came in at 215,000, better than expected, a labor market that's cooling slowly, not cracking. Put it together, firm jobs, a hawkish chair, split minutes, and yields grinding higher. The stock market is partying on a rate relief story the Fed hasn't actually promised. Next week, it gets tested. This is the payoff, and next week is loaded. Tuesday, July 14th, is the main event, June CPI at 8:30 in the morning, and minutes later, 5 big banks, Citi, Wells Fargo, Goldman, Bank of America, and Morgan Stanley, all report. JP Morgan and producer prices follow Wednesday, retail sales Thursday. Your trigger map. On CPI, with yields already at 2-month highs, a hot print is the real risk. It hands the hike camp the mic and could finally crack this risk on tape. A cool print, and the record on the S&P is right there, 0.5% away. On the level, 7,500 is the line, hold it through CPI, and a new all-time high is the path of least resistance, lose it, and the chips that just came back give it up again. And credit, always, 2.67 now. The day it pushes past 3, we stop calling any of this rotation. One cross-market note, and it ties the whole week together. The biggest event of the week wasn't American, it was Korean. SK Hynix floating its crown jewel on the Nasdaq tells you the AI memory trade is a global bid, not a US one, and Seoul just planted its flag in New York to prove it. The bottom line, this was the rotation running in reverse. Chip struck back, capital voted $26 billion for AI, and my framework, hold the level, watch the spread, held for a second straight week even as the surface story flipped inside out. But the bond market is the tell now, and the chain runs straight downhill, A hot CPI Tuesday feeds the hike camp, higher for longer rates lift borrowing costs, and that lands hardest on the AI capex build-out, the very high bandwidth memory demand that just powered Meta, Micron, and SK Hynix. Yields are climbing into a print that decides whether this melt-up has a second act. Watch the level. Watch the spread. And watch the 10-year. That's your weekly brief. I'm Big Z, follow me, see you in the next deep dive.